Hey everybody, Frank Finance here. Hope you're having a wonderful day. More bad news coming for Didi Global. Since its IPO near early July, their app was removed from the App Store and they've been banned, and new users can no longer sign up. Existing users can still use the app, but what we're seeing is data coming out showing that they've lost about 30% of their active daily users. In this video, I'm going to go over the article that discusses the decrease in users. I'm also going to talk about some bright things I saw in this that probably are being less discussed. And then finally, I'm going to talk about the implications upon the stock price itself, and if we've seen that already kind of show itself in the stock price as of today. All right, jumping to the article by the Financial Times. Right off the bat, the headline says, Didi loses 30% of daily users after Beijing crackdown following the IPO. If we continue to scroll down, it kind of talks about why the app was removed and what apps were removed. It talks about the share price has fallen 40%. We'll talk about that a little bit later in the video as it relates to is the stock at a fair value currently. This is where it gets interesting to me personally, is the average daily user count in August fell to 10.9 million from 15.6 million in June. Now that's actual real numbers from Aurora Mobile. So this is what they're either estimating. I doubt they have I'm not sure exactly how they get this count, but it's the best data we have to go on. It's the most information we have to go off of. And there's about a 30% decrease between this 4-point-something million difference between August and June. And if we go, actually, before we continue to go down into the graph, it's important to, it's kind of interesting, this is basic historical rate of signups has been about 4 million users a month. So just the number of new users signups almost bridges this gap between how many active users they had between June and August. So that's one important thing to note. It almost completely, if there was a decrease, it'd be very minimal, under 5%. Just off of new user signups of 4 million users a month. So they've lost between July 4th and today's date, it's the 18th of September, let's say 2.5 months, so about 10 million new user signups just so far since the app is being banned. That's huge. And this is one of those things that's important. All right, as we scroll down here, there's actually a graph that sheds some light on one concern I have, and I've been talking about it in a lot of my videos, is market share erosion. As the app is off the App Store, it really creates an opportunity for competitors to come in and sweep up some of that 90% market share that Didi had prior to the app ban. And this is actually, in my opinion, pretty positive to say that that's not happening at the rate at which I thought it was occurring. So let's go ahead and look at this. If you can kind of see back in August, this was July, June, May. So May, we had a kind of a peak here of 16. We had about 15 something in June, around 14 something in July, down to a little over 10.6 or something in August. And you can see that this is just from July to August was a 30% decrease. You can see even from here to here, it's going to be more than that, probably 33, 35%. But if you scroll down and you just look at the sheer number, let's say the 4-point-something million, if I'm looking between July and August, none of these competitors got anywhere close to seeing that sort of increase. That you would see a sharp increase up here by 2 million or 1 million, at least a half ticker mark for any of these competitors. For Piggly Express, you saw a decline here. The only one that I've seen in a constant up is this T3, and back in June they were sitting at about 1, and now they're like 1.5, 1.6 maybe. And that's pretty considerable for them, but it's not nearly making up the the decline that Didi has seen in this time period. And same thing for Piggly Express. I think I talked about Piggly Express. They saw a decline. They had a pretty big tick up here from about 1.5 to near 2, and then it went back down a little bit between July and August. And really all the other competitors, the biggest one, Dida, really, they've been kind of in a decline since, middle of the year, April timeframe. So, you know, as Didi was continuing to go up, they're actually losing a little bit, not a lot. I mean, this is about 3 down to, they're a little over 2. So you could probably even say this one went from 3 to 2.2, 2.3, half a million. These competitors could be picking these guys up. These could be smaller markets. I don't know. But all that to be said is you should see some volume increase by these smaller players if that market erosion is actually taking place. And that's kind of where I think this is actually good news for Didi. You're not seeing huge upticks in volume from the smaller players. And so that market erosion might not be occurring at the rate at which I had anticipated. All right, so transitioning into share price, knowing that daily average users have dropped by about 30%, and assuming that those daily users were average and how much they spent, we could assume that the revenue Didi's going to see for the quarter is going to decrease by about 30%. Thus, the share price should, and let's assume that it continues for the next 12 months, the share price should decrease by about the same. And we know that there's going to be zero growth for Didi until the app is removed. In fact, we're going to see some degradation in the, we're going to see a decrease in the number of users until the app is added back to the App Store. We talked about drivers not being able to get new users because they're not coming on. And then the same problem happens with new users, existing users. As drivers drop off, existing users have to switch to go to where the drivers are. It's kind of a catch-22 where you got to have drivers, you got to have riders, and there's this fine balance. And if you don't have a steady influx of either going into the Didi app, as people drop off, you're going to see more people drop off on both sides, drivers and riders. So with that being said, what have we seen the Didi price do? Since IPO, they're down about 41%. If we look at around what I thought was the fair value, around $12, they're down about 31%. And the fair value of $12 was really pre-IPO, was right around the IPO, and it did not factor in all this cybersecurity concerns. So right now, you got to know that there's going to be zero growth in number of users, zero growth in revenue until they get that app back in the App Store. But what this does tell me, decrease in 30% of revenue. If we assume that the app is going to make it back in the App Store, hopefully soon, we are running out of the time. I kind of put a 3-month time limit on that for myself, just thinking that's a reasonable, but I think we're running up on that. We got about 2 weeks left. And I don't think we haven't heard anything back from the CCP on when they anticipate it. I assume it's just going to make it back there one day, but we'll have to see. I don't want to be guessing for too long on that, but I have set a time limit for myself. If we go ahead and look at what the price has done, it's down about 30% since what I thought was a fair value at 12. So in my opinion, the stock price shouldn't react too much to this on Monday, or really the news came out on Friday, and it didn't really react too much. But the thing that's important to note here is, this is a very volatile stock. You have to be prepared for the ups and downs. The low here is, at 720, so it could drop back into that number. But just remember, revenues. If we're thinking about revenues, right now they're down about 30%. Right now, they could continue to go down as more people drop off the app. The longer that the app is not in the App Store, the more we're going to see decreases in revenues. The more we're going to see people drop off the app, and that's just going to be a kind of a vicious cycle until they get the app back up there. And then it's going to be another battle to get people to come back to the app. As I've talked about before, some of this stuff is trendy. People like to be where everybody else is. And once you have a foothold, then having 90% of the market, it's kind of like, that's where everybody is, that's where you go, that's what people are talking about. But those things can be kind of fickle if, you have a regulatory, thing here that's basically prevents that from happening. New people can't come on. So even if you refer a friend, they couldn't come. So those people start to experiment with other things. They start to find other things that they like, and it's hard making people change from what they know. And so that is going to be the challenge of getting people off of those other apps and back onto Didi. Now they have the technology advantages. They have first mover. They have size. They have scale. They have price. They have drivers. They have more users. They have so many things in their favor. But if they don't get their app on the App Store, that will ruin all of it. So just keep that in mind. I know I've talked about this a lot, but best of luck with Didi. Continuing to hold it for now. I'll continue to make videos as things change, as new information comes out. That being said, Didi's not really coming out with anything, and the CCP themselves aren't really saying anything else. This is honestly the best bit of information we've had to go on, really a month and a half. Please remember to comment, like, subscribe to my channel. It helps me out a ton. Thanks so much for watching today's video. My name is Frank Finance.